Reddy, Managing Director at Dodla Dairy, joining in with us to talk about the outlook of the company, what is happening going forward, and where should we see the company's move going ahead. This time, a bit of a subduedness. Mr. Reddy, thank you so much for joining in with us this afternoon on ET Now. And, when I'm looking at it, let's just talk about the whole year, right? For FY24, the company managed to see a double-digit growth. Q4 was a single-digit growth, high single-digit growth. Could you talk to us about the growth outlook for the company going forward? This double-digit growth, is that something that you would sustain and start seeing an improvement? And also in terms of the milk pricing trends, right? Where do we see that headed in 2025? What is the expectation?
The last year, 24, when we see good results in terms of top line growth and in terms of our bottom line, top line was predominantly driven by even the price increases that we had. So although the volume growth was a bit muted by in terms of growth, but the price increases that were effectuated because of the lack of milk or whatever reasons, those were the reasons that drove the growth. And therefore, later when the milk prices sort of stabilized, we were able to hold on to those pricing, and that is also what has driven our EBITDA growth. When we consider for the going forward for this year as concerned with Dodla, even if we have a little bit of muted in terms of top line growth with bottom volume growth with milk in Dodla Dairy India operations, we have undertaken many steps in terms of our value-added product sales increase. We'll be doing a lot of that, and therefore we are sure that we'll maintain similar kind of growth trajectories and bottom line trajectories as we go forward. Additionally, we have added additional capacity in cattle feed, and we've also acquired another unit in Kenya, which has also come on stream. So we'll have benefit of those two also for the full year this year.
Okay, but sir, I just wanted to get a sense from you, Mr. Reddy. Will FY25 see more pricing-led growth also apart from the volume growth?
No price increase. There will not be any price increases that will come forward in the going year, because I think milk is already ample in the system. Because we have ample milk products that we had withdrawn in terms of ghee, which we were not able to have and we were running short of butter. We are reintroducing all these products, and that is what will drive our growth. Even milk growth, we will continue to have milk growth, which will be there, but it might not be in terms of double-digit growth of milk. It will be in the single digits, higher single digits.
Right. I just want to touch upon the point, right? Value-added products, that segment, around 29% of your FY24 sales. Do you think, that will see more of an increase going forward in FY25, and how do you see this mix changing?
So we are actually actively pushing our ice cream sales, although ice cream sales as a percentage will do much better than the last year in terms of the growth. But since the base being very small, it won't show a significant uptake in terms of overall revenue growth, because our revenue growth will be substantially larger, considering into consideration cattle feed and Africa coming into play. But also we will have a larger segment of ghee sales that will come into play this year. So that would add a significant number of, by volume, maybe almost increasing our top line by another 3-4%, which will translate into 2% at least volume value-added growth. 29 might become 31%.
Okay, so 29 will become 31% with respect to value added, given the focus on ghee and ice cream, etc. But would that mean higher margins as well? I'm guessing that's the corollary.
To be more on the conservative side, more than improved, we are very confident that we'll maintain this current trends, which will, because as ongoing the last month that we have seen and this month, which is what we are seeing good margin profile improvements. So, but at least we can say that we'll maintain the same margin profile very confidently.
Right, and in terms of overall, could you just talk to us about the flush season that went by? What are the benefits that we're seeing, and what is the expectation?
I think this year, mostly in the areas where we are operating, we are seeing a good amount of milk production. We have not seen significant drop also, and as usually it should happen by April, May. It's sort of maintained well. So we are seeing no issues on milk availability. This year also, we think there'll be plenty of milk available in the system. And as a company, we have taken a stance of going aggressively on procurement and rather erring on the side of instead of buying ghee or fat or powder, we will be net sellers this year for sure. And that is the reason why we will not face any issues on milk procurement per se. We will have ample milk with us.
Sure, and Mr. Reddy, I understand you're looking at augmenting capacity in Kenya as well. How will that help your revenue growth? Any ballpark number that you can help us with?
Earlier moving milk from Uganda to Kenya and selling in Kenya. Now we have our facility also in Kenya. Earlier, there used to be some government restrictions between the countries of not letting milk movement happen comfortably. With these two plants in place now, we will be able to concentrate more on building our market share in Kenya also. So we will have an improvement in market share in terms of overall growth of the African operation. And the same trends are also continuing in Africa, where there is good amount of milk and profitability is going well. So we will see the same trajectory on profitability growth also. So I think this Africa will be more stable for us now with getting a Kenyan plant, not having the ups and downs in sales.
Right, Mr. Reddy, could you also talk to us just about in terms of the market share currently, and where are you aiming at in terms of market share, whether the South market or other regions?
So, like we always keep looking to go forward, we will be looking for acquisitions, and we're looking at an expansion in Maharashtra also. But if something else comes, we might take that on and then hold back on certain greenfields and take on an acquisition if we come across. So that has been also growth strategy into going into newer areas. In the existing areas, we have actively started doing more of a brand creation exercises. We have sort of kept our now we have upped our advertisement budget and we are advertising a little bit more. We are trying to get more reach, and we are hoping that with that we will see a little bit of market share increase also in the South.
Okay, spending to make sure that the market share increase happens. Thanks so much, Mr. Reddy, for joining us today. So that's a word coming in from the management of Dodla Dairy. But shifting.
If you like this video, then like, share and subscribe to ET Now.